Joining me now in an exchange exclusive is Pat Pacious. He is the Choice Hotels CEO. Pat, it's good to see you. Welcome.
Great to see you, Kelly.
You know, I talked and thought a lot about our chat last quarter when you really called out infrastructure and reshoring as driving demand for your hotel rooms. And I'm curious if that is still a strong tailwind or moderating somewhat.
It's still a strong tailwind, and it's really a tale of two stories here. You've got the government infrastructure spending, which will take some time to get going. But what's been really remarkable is the private sector construction boom that's going on around manufacturing. In last year, I think the number was a record number of $108 billion in spend on construction of manufacturing facilities. That number is expected to be $141 billion this year. So we are seeing both the private sector and the public sector beginning to rebuild America, whether it's infrastructure, whether it's factories. You know, we're seeing it in the hotel business as well. But it's a really nice tailwind that we expect to see that'll really drive demand for mid-scale hotels, for extended stay hotels, which are really our sweet spot.
So if you look out to the rest of the year, then what starts to color, you know, it's the obvious, right? We all know that the outlook darkens a little bit because we've just had let's call it a bank crisis. We don't really know exactly how that's going to shake out. Is that where you start to worry a little bit about the trajectory?
Well, you know, just 2 weeks ago, I was with about 5,000 of our franchisees and general managers. We gather once a year, and it's a great opportunity for us to hear what they're thinking about. They're seeing supply growth is muted in the hotel sector, but they're seeing demand growth expected to be at record levels in 2024 and 2025. That's the perfect time to be building a hotel. And right now, when you look at the ability to get capital, capital is more expensive, but for our size hotels, the equity check that our owners write is generally they put more equity in to a project than you might if you're up in more of an upper upscale hotel. So the debt check that they're looking for, the loan amount, is not as large. And they are pretty optimistic about their ability to get financing. When I look at our hotel pipeline, we have about 925 hotels in our pipeline. Half of that is already financed. So we feel really good about the ability to continue to grow our business because of the sector that we're in and the type of small business owners that we have who own our franchises.
Absolutely. I'm curious if you can talk a little bit about kind of trends and normalization post-pandemic. I know that, you know, work from home is still changing the way maybe that people travel and show up at your rooms. Is that going back to normal now, though, because we know the labor market's tightening and companies are pulling people back?
No, Kelly. In fact, we're continuing to see occupancy grow on what we call the shoulder nights of the weekend. So we're seeing leisure travelers extend their weekend into Sunday night and starting their weekend on Thursday night. In the fourth quarter, that occupancy rate was up 4 percentage points over 2019. We saw that continue into the first quarter where it was up 2% as well. So we're continuing to see that remote work trend really establish itself. The other thing that's exciting is the number of retirees in this country is growing. When you look at the labor force participation rate of people 55 years and older, there's a great study that the St. Louis Fed has done that really shows there's a lot of people who retired early. And because of the value in their homes and the value in their stock portfolio, which over the last 3 years has grown significantly, they feel pretty comfortable with their net worth to retire permanently. And so those are folks who have more leisure time. They've got more discretionary income. They're living longer. They're more active. And those are great travelers for our brands.
You should talk to Clarence Otis, the former Darden CEO. He said almost the exact same thing here a couple of weeks ago about the restaurants, that a secular tailwind is the retirees and that age cohort. They tend to be restaurant spenders, and he thinks that could keep restaurants going through a tough economic period.
Well, and the interesting thing is, by the time we get to 2030, 1 out of every 5 Americans is going to be over the age of 65. So we're seeing 3.5 million people a year reach retirement age. And so we're really beginning to see this kind of become a permanent part of our consumer base. The other thing that they got this year was a Social Security cost of living bump of 8.7%.
True.
So they do have more spending power to stay in our hotels.
Well, one more segment turns into a glowing review of 65-year-olds. I'm going to start getting worried. Pat, thanks so much for joining us today and on earnings and everything else. It's good to check in with you.
Thanks, Kelly. Take care.
Pat Pacious is the CEO of Choice Hotels.